Hello everyone, I'm Matthias, and today we're going to take a look at the companies on my watch list. So these are companies that I'm doing research on, companies that I'm building convictions on, and also companies that might even be introduced to my portfolio in the future. So if you followed my channel, you'll know that my portfolio looks something like this. So I have Novo Nordisk as my largest position, Palantir as my second largest one. And then in January of this year, I initiated my Microsoft position, and now I've scaled it into my third largest position. A common thread in my portfolio is that it consists of technology companies and precisely platform companies. So I would say Palantir, Microsoft, Meta, Hims, Amazon, Nu, Duolingo, Mercado Libre, Sea Limited, and even Nebius with the Nebius Token Factory actually are platform companies. This is a common thread that you will also see in my watch list. These will be big, large-scale platform companies with immense proprietary datasets that they can yield to increase the user experience. So yeah, before we get into my watch list, this is not financial advice. I work for NewDeal Invest, and NewDeal Invest holds positions in some of the companies on my watch list. However, they have not watched or approved of this content. These are just my opinions, my research, and my thoughts. So let's get into it. So the first company on my watch list is Uber. So basically, very shortly and concisely, I believe that the market sentiment that dominates the narrative around Uber is just misguided and wrong. I do not believe that electric vehicles scaling will be a headwind for Uber. I actually believe that it'll be a tailwind for them. I believe that Uber will be able to yield AVs in order to scale their business and scale their productivity and profitability. We can actually see that Uber has actually been very good and successful at scaling their rides on a yearly and even quarterly basis. We can see right here that last year they had almost 14 billion trips. This year alone, so in the first quarter, they had 3.6 billion trips. This is a lot, and this scales year after year. It keeps on increasing. Demand keeps on increasing for Uber's products. They keep on going into more markets. I live in Denmark, and they just recently entered Denmark, and they're also increasing their presence with Uber Eats right now, right? So the market sentiment would suggest that this company is dying. We can see that it's priced quite cheaply at a free cash flow yield of 6.4%, right? So this suggests that the market thinks that this company will be disrupted. However, we can see that the revenues keep on increasing. Moving on to a quarterly basis, we can actually see that they're starting to print free cash flows. So they're becoming quite profitable as well. So the market sentiment and the dominating market narratives just are not correct when it comes to Uber as of right now. And I believe that these narratives will not hold in the future. Uber will be successful at aggregating AV demand, in my opinion. I believe that there's nothing wrong with Uber and that Uber is a great opportunity at this point. However, I believe that there are more obvious opportunities in my portfolio, and that's why I've not started a position. I recently did a video with Arya Ratnia from Quality Invests where we spoke about Uber and the investment thesis, so you should definitely watch that video and go and watch his videos on his channel about Uber. And the company is, in my opinion, a very solid company with great future prospects. And they're one of these huge, large-scale platforms that have immense proprietary data. They can yield their dataset to increase the user experience. They can use their scale to decrease prices over the long term, right? So I believe that Uber sits in a very lucrative position and the market just misunderstands the investment thesis. So let's move on. So the next company on my watch list is CoreWeave. And the next company after this one is actually Iren. So let's just take these two in once, right? So CoreWeave and Iren are neocloud companies. They buy NVIDIA GPUs and they rent them out and they build these huge data centers where they rent out this compute capacity to hyperscalers and AI labs, right? I believe that this business model is very interesting, and these are companies that I'm learning about. CoreWeave and Iren as well. So I'm doing research on both of these companies simultaneously as I do research on Nebius. As you can see in my portfolio right here, Nebius is my newest position and actually also my smallest one. I will be building and scaling this position as time goes. I believe that Nebius is the most interesting out of these three neocloud companies, right? But this does not mean that I'm not still learning about CoreWeave and Iren. So I believe that there are vastly different philosophical approaches to solving this neocloud hyperscale issue, right? And all these three different companies take on different approaches. We have CoreWeave that seems to be very, very good at orchestrating GPU clusters. They seem to be very great at orchestrating data centers to increase efficiency. It's like a huge supercomputer that you can actually rent capacity in, right? They all build large-scale data centers and they rent out this capacity. And CoreWeave seems to be taking on a lot of debt to buy a lot of GPUs, to increase their gigawatt capacity, to increase their scale in the future. Iren also has an interesting approach to how to solve the neo cloud issue, right? So they're very focused on power and energy and on solving that bottleneck. And I believe that that approach is very interesting as well, as power and energy is a very, very tight bottleneck. And they seem to be very good at converting natural energy, so solar and all these things, into capacity for compute. Then we have Nebius that focuses on building a vertical full stack hyperscale platform with the Nebius token factory, with all their software solutions, right? So I believe that Nebius, for me, in my opinion, is the one that can actually live the longest, as they have the ability to serve non-hyperscale, non-AI lab companies through the Nebius token factory, through the software layers, right? So I believe that this is the most interesting one, but I'm still learning about the philosophical approaches for all these three companies. And I actually have a video on the way that speaks about the differences between these three and their approaches to solving the NeoCloud issue. So let's move on to the next company on my watch list. All right, so moving on, we have Netflix. Netflix is another company sitting on my watch list. This is a company that I've been living with for a long time, doing a lot of research on for a long time, and the price seems to get more and more lucrative as the market just keeps on dismissing, discarding, and misunderstanding this company's long-term prospects. It seems as if Netflix and Spotify and all these streaming platform companies are going down because they're not chip companies, right? And also, there are negative sentiments and negative narratives surrounding Netflix as an investment case right now. They do not have these big shows going on. They're missing on successful shows, blah, blah, blah. I believe this isn't the case. I believe actually Netflix delivers a lot of value to their customers. They're one of these companies that can keep on scaling and keep on compounding over the long term. They have some of the same fundamental things that I like as a company like Microsoft, right? So they're able to grow their scale and increase prices over the long term. We can see right here, they stopped consistently mapping their total subscriber numbers, right? But as we can see, they've been able to scale their number of subscribers on their platform. They're very good at matching content with users, and this really does show, and this is very valuable for all these users. So they're able to scale their amount of users on their platform quite successfully, also increasing prices over the long term. Now they're introducing this ad tier that makes the whole experience much cheaper and changes the story around Netflix from a subscription story to actually being an ARPU story. So how well will they be able to monetize these advertisements? How well will they be able to match advertisers with users, right? So this is some of the things that I'm watching out for. Their ad tiers actually, and their ad revenue, which is high margin, is growing quite fast, right? But if you guys want to watch a full Netflix video, I would be more than happy to lay forward my investment thesis for Netflix. But shortly, I believe that Netflix is a very interesting company. They're able to scale their users, increase prices, and deliver a lot of value over the long term, which in turn will mean that they'll increase their revenues quite sustainably. They're able to buy back quite a lot of shares over the long term, right? So they do not pay out dividends, they buy back shares. And interestingly as well, as they keep on growing, they keep on spending more and more money on content. So they're very fixated on delivering value to their subscribers. This results in a company that keeps on growing their number of subscribers and a company that's able to increase prices, as I've said. And as we can see, they're churning out very, very high margin free cash flows right now. They're very good at being profitable. They are printing cash flows. And you can buy those cash flows at a free cash flow yield of around 3.7. I still do not know whether this is very, very cheap or a screaming buy, but I'm still learning much more about this company. I'm living with it every single day. I'm using it myself every single day. So let's move on to the next company on my watch list. So, in my opinion, SpaceX is a very divisive company. It obviously is, right? So, SpaceX is either a company that you're hyper bullish on or hyper bearish on. Oh, they're trading at an incredible multiple. Oh, they're worth $1.9 trillion, only churning out $18 billion of revenues, growing at 33%. This is very expensive. And they're burning free cash flow. They're unprofitable. They're wasting money on XAI. This is one of these narratives going around about SpaceX, right? And then we have the opposing one. That is, SpaceX is a bottleneck solver at scale. They're solving a lot of high value bottlenecks for humanity: energy, compute, abundance, right? Abundance of material, abundance of connectivity. They'll be able to solve all these things. And I'm trying to navigate between these two perspectives. I'm far away from saying that SpaceX is a company that I'll be buying, but I'm doing a lot of research on the company. I'm trying to see the company as a bottleneck solver at scale, solving the bottleneck of energy, solving the bottleneck of compute. And I believe that this is a very constructive approach. I'm not saying that it's a stupid company. Also, I'm not saying that it's the greatest company in the world. I'm just saying I'm trying to learn about it. And there'll also be a video about SpaceX coming out very soon. So if you want to see that, put it down in the comments and I'll upload it as soon as possible. However, SpaceX is a very interesting investment case for me, right? Compute is scarce, energy is scarce, and they're trying to solve all these things. However, I do not think that we should spend a lot of time on this one, as I have a video coming out about it in the future. So let's get on to the next one. All right, so the next company on my watch list is Zeta Global. So Zeta is a very interesting case for me, right? So they are a huge proprietary data platform, similar to Uber, similar to Netflix, right? In the case that they have all these different profiles, both in the US and internationally. So what Zeta is a marketing tech platform. So what they do is match advertisements and companies with potential customers. And they have a very large proprietary data set to actually do this. I have posted a video about this company previously where I walk over the thesis, and this is a company that I'm continuing to learn about. It's a company that I'm continuing to do research on. It's still not something that I'm comfortable buying. However, I'm getting there, right? I believe that this is a very interesting platform. They're also pivoting into being a B2B intelligence platform, so a business intelligence platform. Where should we open stores? Where would be profitable for us to open stores? What customers should we try to go for, right? And this is something that they're solving for with their advertising and with the Zeta marketing platform, matching advertisers with potential customers. And they have a lot of data to do this successfully, churning out 600% return on advertisement for the advertisers, right? So every dollar you use, you get $6 back in revenues at a minimum, right? And this is trending towards 1,000 with Athena. So Athena is their own LLM, it's their AI service. So it's this AI agent that you can actually chat with and that you can converse with, where you can run simulations on marketing campaigns, where you can converse with it about what type of customers you want to reach, what type of customers not to reach. So it's a very intelligent model that can actually yield immense return on investment for advertisers. Investment in artificial intelligence is all about finding out where customers get value. And it's very obvious that Zeta is one of these places where customers just get a lot of value. So that is why it's a company that I'm doing research on. It's a company that I'm building conviction on. And it's actually a company that I find very, very interesting. If you guys want to see a full video about Zeta, you should definitely leave that in the comments, just to make it very, very clear. I believe that Zeta will be able to grow a lot in the future. I believe with their immense proprietary data set, with their actually ability to scale and increase their revenue, so they're growing almost 50% year over year right now. They seem to have reached this inflection point because they're able to create value for the end customers. That is essentially what it's all about. How much value are you able to create? With the Zeta marketing platform, with Athena, with their immense data set, they're very well positioned to yield incredible returns for the customers. And that's what it's all about for me. The final company that I'm going to talk about today is Lemonade. Lemonade is this insurtech company that I believe is going to become incredibly large in the future. It's a company that I've done multiple videos on my channel, and it's a company that I'm still building conviction on. It's a company that I would actually be quite comfortable holding right now, even though they're not profitable. As we can see right here, they're not net income profitable, but however, they are growing their revenues by quite a lot. And they're able to actually accelerate their in-force premium growth. So they're accelerating their revenue growth quarter over quarter. This means that they're creating so much value that they're becoming impossible to overlook for customers. Historically, this is a company that's been able to collapse unit economics over the long term. So their ratio of in-force premiums and operating expenditures, as we can see on the screen right now, is actually becoming very interesting. They have a lot of operating leverage because they are AI native. Their ability to scale correlates with artificial intelligence models scaling. So as models increase and as models improve, their business metrics improve. And also, they have a lot of proprietary data to increase their model efficiency, to increase their underwriting efficiency, to increase their ability to price each individual customer. The thesis with Lemonade is that this company will become a highly personalized insurance company that prices each individual customer for their own risk. And also, they do not take on risky customers. They're very, very conservative with what type of customers they take on. Also, they have a quite interesting long-term approach where they try to grow along with the customer. So on your screen right now, you can see that their ability to increase their earnings improves as their customer ages in terms of how old they are. Oh, they start with having a pet insurance, then they move on to having homeowners insurance, car insurance, and they have their whole insurance stack on Lemonade. As Lemonade becomes this highly personalized insurance platform, right? So also, as I mentioned about this, they will be able to increase their average revenue per user quite a lot as these users grow. They are the most popular platform for pet insurance, as well as their ability to decrease and collapse their unit economics. It becomes cheaper for them to run insurance per customer. They become much more profitable per customer, as we can see right here, right? So their in-force premium just keeps on increasing and their operating expenditure stays flat or even declines over time. So they do not have to increase their personnel in order to increase their monetization on their insurance. I've made a lot of videos about Lemonade, and I believe that sort of just quickly spitting out this thesis doesn't do the company justice. So you should definitely go and watch my thesis videos on Lemonade. So that's been it for me today, guys. I hope you appreciate this different type of video. I know that I usually dive much deeper into each individual company, and this might perhaps be a bit off, but however, this was a good challenge for me as well, trying to keep the thesis condensed and short and trying to get to the core of things quickly. If you guys want to see my other watch list, which is a watch list consisting of a different type of more mature companies, you should definitely leave a comment down below. I'm trying to reach 1,000 subscribers before the end of the year, and I would really appreciate your help with me getting there. So definitely hit that subscribe button and put a comment down below what company you would like to see more videos on in the future and whether you disagree with me. I appreciate your time, and I'll see you in the next one. Bye.